Welcome back to Dominating Your Investments. I'm Dom Rinaldi, and today we're going to go through Teladoc Health. We're going to take it through our 5P scoring system. We're going to go through people, problem solving, platform, profitability or path to profitability, and predictable revenue. So we're going to see how it scores. It's going to be high level. I'm not going to promise it's going to be 5 minutes because we know I can't keep to 5 minutes. I like to talk about stocks too much, but this will be a shorter video similar to the one on Zoom. So here is our 5P scoring system. We're going to first go over people. We're going to look at the leadership team, the CEO, the company culture and how it scores in Glassdoor. Also, how much inside ownership from a stock perspective, as well as institutional ownership. And then we're going to look at problem solving. How large are the problems is Teladoc solving? And what is the total addressable market and how big it is? And is it global? Then we're going to look at the platform. Do they have a platform or ecosystem sales model? Is their product superior than their competition? Do they breed optionality for future revenue growth and a strong brand with their customer base? And then profitability or a path to profitability in the next 3 to 5 years. We want to make sure that we can see that path very clearly. And predictable revenue, high gross margins and sustainable growth, and preferably reoccurring revenue. So let's start with people. So you can see here, the first thing I want to actually highlight is we just had tornadoes very close to where I live in Tennessee. Kentucky was truly impacted, and numerous other areas in the southeast region. And our thoughts and prayers go out to all those in Kentucky, as they were definitely the most impacted in the storm that just happened 2 nights ago. And so we can see here that Teladoc is already providing free virtual healthcare services to those impacted by those tornadoes. And that tells you a lot about the company culture and about the leadership team, just as far as reaching out to those in need and being able to help contribute. Now let's look at Glassdoor's ratings. See what the employees are saying about what it's like to work there and working for Jason, the CEO, and the company culture itself. So you can see here, Jason did get a top CEO ranking of number 40 in 2021. We can see that they also won the JD Power Award for highest telehealth satisfaction with direct-to-consumer providers. So that's going to be more for a ranking later in the show of what customers are saying about it externally. But if we scroll down further, we can see 71% of people recommend to a friend to work at Teladoc. And 89% approve of the CEO, Jason Gorovic. And 3.9 overall stars out of 5 for working there. So we can see here some featured reviews, great place to work, positive outlook, phenomenal benefits, and also a major focus on diversity. Out of those 354 reviews, 107 actually scored the diversity and inclusion portion for a 4 out of 5 stars. If we scroll down further, let's look at the accolades and awards that they've won. So 2015, one of the 50 smartest companies by MIT Review. 2016, they won the One Club Gold Pencil and Merit Award in 2016. 2017, the Most Trustworthy Company Award. 2018, Best Telehealth Platform. 2020, one of the 100 most influential people in healthcare. And then if we look at 2021, just cleaned house. Most innovative companies, fast company, growth, Fortune Best Workplace, Great Place to Work 2021 certified. So you can see it's only getting better regarding that. And then you can see their Glassdoor pledges and certifications around focusing on career advancement program, diversity, social responsibility, and first job programs. All really good signs of a great company culture and attracting top talent. Now let's look at inside ownership and see what does that look like from a shareholder perspective. Now you can see here, FinViz, I'm using the free version, so I got a couple of ads. Great site to work with. I use this all the time to kind of spot check on earnings per share, institutional ownership, all the different financial metrics, and kind of cross segment that with Simply Wall Street and some other ones. So you can see here, Insider ownership, 0.4%. Simply Wall Street shows 1%. Both are not good numbers. I want to see at least 10% insider ownership, or a good reason why it's not 10%. So that's a little disappointing. So I would say we're going to give a half check mark for the first P for people. Moving on, we're going to go to problem solving. So do they have a problem they're solving that impacts a large total addressable market? And the answer is hands down, yes. Do you know that over half the world has trouble just getting basic healthcare services, things that we take for granted here in the States? So that is a large population. 1 out of 4 Americans actually have no primary physician doctor as well. So we know that there's a lot of improvement that we can have from the healthcare system, whether it's lower premiums, whether it's a better experience and consistent meetings with your doctor, all kinds of things, or even around preventative, right? A lot of the things that are out there that we can do for ourselves personally around health, we can prevent. In premature deaths, 20 to 40% of premature deaths are preventable. And so that's things like smoking and mental health and all kinds of different things that many companies are trying to solve for. Well, Teladoc is trying to do a holistic, whole care healthcare solution for customers and a platform that really gives the best virtual healthcare experience for anyone, wherever they are. So definitely a big problem they're going after and solving. And you just think about all the people globally who don't even have means to healthcare. And that's really why I invested in this company way back when it was like $66 a share, because I believe this is the company that could possibly solve for this, especially from a global perspective. So the next one is platform. Do they have a platform and an ecosystem that is going to give them a strong brand, and it also is going to have them have a superior product that they can build upon and more optionality? So you already saw the JD Power rankings from the customers. Now let's look here. If we go over to here, we can see they have a 60 plus NPS score from their customers. That is an excellent score when you look at their score on their telehealth products and services. For any company to have a NPS over 60, that's really good. So their customers are liking their product. They're number 1 in app downloads, number 1 in JD Power. They've been doing this the longest, right? This company's been around since 2002. Went public in 2015. And we can see here, you look at all the evolution of this company to get to a whole person healthcare strategy. Now with the acquisition of Livongo, their valuation too, just to comment on valuation, is less than what the acquisition of Livongo is. So they're very undervalued right now. You can see now they're focused with a lot of different acquisitions and channels of distribution that they have for mental health care, chronic care, virtual medical care. They really want to build this out to be a full ecosystem to provide the best healthcare experience possible. So I'm going to give that a check mark for sure for platform. Now let's go on to profitability, or path to profitability, in the next 3 to 5 years. So we talked about institutional ownership at 1%, and individual insiders at 1%, but institutional is 84%. So that is a strong sign. It's actually an extremely strong sign. And we're going to move up here on Simply Wall Street, and I want to see, what do the finances look like? Do they have a path of profitability? What is the growth? You can see here from a debt perspective, we have 1.2 billion, but they have the Livongo acquisition and equity at 16 billion. Cash, they have 826 million. So they have a good net debt to equity ratio, and a good debt to equity ratio. Now it's trimmed down from 18.4 to 7.7 over the last 5 years. So they're still investing in themselves and in growth, but still doing it responsibly from a financial perspective. And then if we scroll up, we're not going to look on the return on equity and assets yet because they're not profitable. So we want to see, do they have a path to profitability. So they're growing revenue for the next 3 years at least at 22.6% per year projected. That's way faster than the US market is at 10%. And they're growing earnings at 53.4% a year. And we can see here, TDOC is expected to become profitable in the next 3 years. So I said it in the next 3 to 5. I'm not in a rush for them to turn the profitability model on as long as they're growing their annual growth rate at these clips and revenue top line, because they're reinvesting in their business. They're building an ecosystem and a platform. And in order to do that effectively, you have to capture market share first, worry about profitability second. So I'm definitely going to say, based on their fiscal responsibility and what they're doing, I'm going to give them a check mark for this one. And then predictable revenue, we already talked a little bit about the growth here, but we can look at what they've done previously. And we can see here, past 5 years, almost 70% annual growth. This past quarter, year over year, was 80.6% with 68% gross margins. So I'm satisfied with that. I think these operation margins and profit margins are only going to get better as the synergies and the benefits of the acquisition of Livongo and a lot of the other mental health care solutions and platforms they've adopted recently go into play. So I expect all these numbers to go up. They're trading at a price to sales of 8.4. And then if we look at just overall what the DCF shows, now keep in mind, discounted cash flow, it's really hard to do these when companies aren't profitable. So you take them with a grain of salt. But the way I look at it is this company was trading as high as over $300 a share at its all-time highs just within the last 12 months. And it's at $94. So I definitely consider it undervalued. Based on analysts' discounted cash flow analysis for the future, they're saying it's a 36% undervaluation. I'm not going to get too tied up on it. All I know is that this is a great company that meets a lot of the 5P scores. So now let's see where it finishes and why it's one of my top 10 holdings. Okay, so let's see where this scored on our 5Ps. So the first one was people. We talked about leadership, company culture, and inside ownership. We're actually going to come back and discount that a half point because we know that the inside ownership was not up to par. So remember that this will actually be a half check mark because it did cover most of it. Problem solving that impacts a large total addressable market, check. Platform that product is superior, they have a strong brand in their community and customer base, and have optionality, check. Profitability or path to profitability in the next 3 to 5 years, we saw that they have that path in the next 3 years, so I'm going to give them a check. And then lastly, a predictable revenue model with high margins and sustainable growth. And based on what they've done the last 5 years and are predicted to do for the next 3, we're going to give them a check. So what are the risks that we could possibly see with this company? The synergy's not growing as fast as what people would like. So maybe the share price could even go even further down in the future if the Livongo merger does not continue to synergize revenues and gross margins. But I really think they've really kind of gotten some of those kinks out, and we're going to continue to see the revenues grow. I mean, they grew 80% year over year last quarter. And I really think that they have a laid out vision on what they want for an ecosystem. I can only imagine what they're going to do with smartphones and apps, with preventative healthcare, and really bringing it all together with insurance providers, doctors. I just really see this just coming full circle here in the next 3 years. So I think there's a lot of upside potential in Teladoc Health. So we're actually going to give it a final score of 4.5 out of 5. So would love to know what you thought of the video as well as the scoring system and what you'd score it. So leave a comment there. You can also leave a like and subscribe to the channel for more videos like this. Thanks and have a great day.